Welcome to another episode of Cycles TV. My name is Lars von Thienen and you are watching the Monday Cycles TV episode. Today I will continue with the series we started in the past week on sentiment cycles and how to use different data for that and to overlay sentiment cycles on stock price. So similar to what we did last week, I will continue that series and also explain you also how to use the cycle analyzer. In today's session, we will use the volatility index, the so-called VIX index, which measures the volatility on the US stock markets, as a kind of sentiment indicator. And then we try to identify and isolate cycles in the volatility index and overlay that on the price chart to have cycles in volatility as a similar sentiment indicator to identify possible cycles which could drive stock prices from the underlying cycles in volatility versus sentiment. So that's the purpose of today's action, and I will walk you through how to do this. Anyway, we are live today, so thank you for the congratulations to the HSV Hamburger Sports Club. So the Hamburger Sports Club did a very favorite goal this weekend, but this is just for the German community here. So let's concentrate on the US stock markets, cycles and volatility, and the VIX index, and we can talk about the Hamburger Sportverein at the end of the session, or Google it on your own, what happened here in Germany last weekend. Anyway, before we jump into sentiment, volatility index cycles using the cycle analyzer, you know it's almost 4 weeks until we have the opportunity to meet in New York when we host our first live event for 3 days together in New York. So therefore, let me please give you a quick wrapper. If you have not thought about it, please think about joining us in New York in 4 weeks. Opportunity to really meet us face to face and join us face to face in New York. So, but on today's session, let's move to having a first view on the volatility index, which is plotted here in our cycle analyzer. So what we're grabbing here is the VIX index, which is reported daily. You see those information here. So high volatility readings often then correlate to market lows, while also low volatility is then also seen in market tops. So that's the way how to read the extremes in volatility, and therefore the VIX index is also called as a kind of sentiment, or as a kind of fear index. Having reached high volatility extremes means we have high fear in those markets, which cause huge swings, high volatility in those markets. So the reading is similar to a sentiment indicator. I mean, the raw data here is quite not readable, or we don't see any possible cycles. The reason why I'm outlining this data is because we are interested in extremes. The raw value is not quite usable for forecasting or for prediction, and the extreme values are not known in advance. So when we will reach an extreme, and the extreme levels are not measured in absolute values. So as you can see here in 2020, that extreme was a very high level at around 80 to 90. So that is one extreme. But however, we also have extremes here in May 2020, 2022, and then also those extreme values here in August 24 and here in April 25. So let's just focus on those 3 extreme values here. Those have also been seen in the stock market with major bottoms in those. To confirm that, let's just quickly open just another scanner page. Let's get to the S&P 500. Yeah, just to cross-check that quick thesis while loading the latest data. Let's switch back to that here for a second. So we will revise those correlations just in a minute here. I just want to tell you that what we want to look for are when do we reach the next extreme, and we cannot calculate that extreme in an absolute offset throttle. Yeah, is this an extreme, is that an extreme, or is this level here an extreme? That's why the raw value is not quite as usable. But so first let's just validate the thesis here. So the first top was located here in March 2020. So March 2020 is exactly here, right? That major low from that COVID crisis. So that was the major peak here. So let's just use the main peaks here. So this peak here, which is much lower, yeah, so March 20, and here we have a peak around, what's the date here? 5th August 24. August 24. It's exactly here, right? So you see, this is the second peak, which clearly indicates the stock market low at that point. So now doing the same for that final one here, we had on the 8th of April, yeah, in the volatility index, 8th of April. Let's switch over to the price chart, which is right here. So, which is also major low in the stock indices. So that's just explaining how we read the volatility index also as a similar to a fear index. The topic is just how to isolate extremes, because the extremes are local extremes, yeah, and you cannot identify that from absolute throttles or values. So often you might see volatility above 30 might indicate something, but as mentioned, volatility above 30 we had a lot of times here in the past. So but this value here with 37 was a major low, and this here we had 51. So is it 37? Is it 51? Is it 80? So what is now the offset value to identify a key low? And that's what I want to tell you. That's not possible from the raw data. So what we can now try to identify is their cyclic behavior when we reach those extremes. And as you know, from a cyclic point of view, we are not interested in the absolute values, yeah, identifying the most important level of the volatility index to reach. We are interested in timing signals. So we are anyhow not interested in absolute raw values. We are interested on the x-axis, on the timing information. So the next question I want to analyze with you is there an important cyclic rhythm in the volatility index, which I would also call kind of sentiment index, yeah? So let's do this next based on the spectrum. That's our basic job, what we're doing as a cycle analyst. We will review what we will see in the spectrum here down below. So this is now our next job to do. And this is a real spectrum which could give you some headaches because it's not easy. We have a lot of peaks here in that cyclic behavior. So it's not quite easy to identify the most important cycle to pick. I mean, if we would concentrate on the most important level here, so we have 1, 2, 3, 4 possible peaks to identify or isolate the cycle. To make a long story short, we have talked often here about our little helpers. You could also call this artificial intelligence nowadays. However, we have implemented ways to identify the most important cycle out of the spectrum, which makes your work much easier based on a ranking score. And in our latest updates, we also have stability scores. But let's start with the ranking score. The ranking score identifies the most dominant cycle from its shape in the spectrum, which from the ranking mechanism, so the first one here is indicated as this peak here. So 128 days, which is from a visual shape, the best shape if you would look at a spectrum and pick the one from a visual separation, the amplitude and the sharpness of that peak here. So I will not go into the details of the ranking. And the second key measurement here, at least I will show you here in our weekly session, is the so-called stability score. And if we talk about stability, this means, you will see it here in the lower frame, which plots the theoretical cycle, which is the red colored theoretical cycle of 128 days, compared to the isolated price behavior of 128 days, which means if you have an alignment between the light blue dotted line and the red theoretical cycle, we have a high stability of that cycle, which means if you see the top in the light blue coming in alignment with the theoretical top of the red one, the cycle phase is quite stable. And you see here, while we have some shifts in amplitude, but the overall bottoms and peaks between real price behavior and theoretical peak is, from a phasing perspective, quite stable, which means this is a very stable cycle in regards to it has a low variation. Yeah, so the repetition of that cycle is not shifting much. I mean, the variation of cycles is a natural phenomena, so we need to deal with that fact. But the lower the variation of that cycle, the more close, the better the rhythm of that cycle, even in the past, without variation, the more interested we are in that cycle for prediction. So you might also have cycles which could be identified, but which have a poor stability or a high variation, and you would not use them for forecasting because you never know what is the variation of that cycle. So that's the kind of stability. In this case here, we have from a ranking, so the visual shape in the spectrum, and from the stability, it's the most stable cycle. So I would go with 128 days, which is this cycle here. So I would leave out, by that definition, those other cycles to make this more complex cycle analysis more easy for us here in that demonstration. So let's assume we have now picked our favorite cycle. We can zoom in from a visual perspective, even so clean up the chart. And we can see, and that's important from a timing perspective. That's what I mentioned. We are interested to identify the timing of the underlying volatility index. We are not interested in the absolute prediction of those amplitudes here. That's what we never do. So starting with this major peak here in this alignment, even going then to the final peak here in 2025, just aligning the last top, which is here, and the first top, which was here, over a period of 5 years. There's even no shift. And this is what I mean. We need to align then from a zigzag perspective the local peaks, which I will just highlight based on that zigzag curve here. I hope you get the message, so that you see this zigzag curve here identifies from a timing perspective the local tops, as we are anyhow not interested in the absolute values. We are just interested in the timing and the rhythm of that volatility index. So that's what we have isolated here now, looking at volatility, the VIX index, as a kind of sentiment measurement. Now we will proceed the same as we did last time to identify if that cycle is valuable to use also as a prediction measurement on the US stock markets. We now need to save that cycle. And we have created a new data series. We have created our artificial sentiment cycle here on that chart. So we will save it so that we can make reuse of that. And then we will move to a more advanced charting visualization, also embedded here. And then we will overlay that cycle to the S&P price index. This is what I will show you next. And you all can repeat that procedure if you are a member of the foundation. So first, what we need to do is we need to save this created composite as our own new data set. With every composite, we have created a new data series. So let's store that. There is an option embedded in the 3 dots label here, which is called Save Composite. Save Composite will now ensure that in your local database, which is hosted in the cloud, you can make reusage of that composite. So let's save that first. See, just composite saved, done. So the next step now is that we will move over to an advanced charting library, which we have embedded here. So once we have done our cycle and analyst work, as an analyst, this is the first step. Let's think about which cycle we want to analyze further. Once we have done that, we can add more complex visualization techniques. So for that, we have integrated what we call here also kind of super charts. If we now switch to super charts, we will just change into another visualization. And we can do this by just a short click here on that icon, which is called Open Chart. So then you don't need to do anything. This will ensure that your data is directly opened in that advanced charting super charts. So I will now click here. You will see another screen or window is then opened, which you might be quite familiar with. So now we have the volatility index, which we just analyzed, brought into a more comprehensive charting environment. So as we want now to grab our composite, the most easy way to do this now is, as you see here, there's a prepared button which is called Load Cycle Composite. And this button now will just load the composite we just have saved 2 minutes before, right? So let me just click Composite, and you see this is now the 128-day cycle we just have created. So we roll over the cycle analysis, which we have finished in the Cycle Explorer, now to our more complex charting environment. So here is the cycle. But as I said, we are not interested in predicting volatility. As I said, we are interested in identifying the extremes in volatility, as the extremes in volatility, from a timing perspective, are in sync with major tops and bottoms in the US stock markets. So therefore, let's bring in now and chart the S&P 500. So therefore, we will add a new symbol by just clicking this plus icon here, compare or add a symbol. And then you need to know the symbol ID, which needs to be entered here as you would do in the cycle scanner. So it's the same symbol you would put here to open that price series in addition, and internally it will now start. You see this icon here. It's now grabbing and always trying to update to the latest data the S&P 500 here. So it might take a moment because it will always check if new data is available. So once this is done, we will see it on the screen. So let's just wait here and I can continue to explain the data. What here it is in this greenish color, we have now the overlay of the S&P 500. So now let's sort a little bit this data set. So the S&P should go into a separate panel we have the 3 dots here. We say move to new pane above. So here we have now at the bottom, we have, you can see it now, it becomes more kind of indicator panel. And on top, we have our price series. Let's change the color here. So that's quite easy. So here we have the S&P 500, and then the bottom we have our cycle. The next important change I would make is let's inverse the scale, because as I said, a top in the volatility reading is an extreme volatility, extreme fear, which vice versa correlates to bottoms. So if we want to analyze that shape on the stock market, we need to invert the scale, which we can also just simply do by doing a right click on the axis. And then we just say invert scale, yeah? Which inverted now the volatility. So that's not what we want. So we don't want to invert volatility. So that scale is the scale for the composite cycle is plotted to the left. So let's do the same here to the left scale. So you see here, that's the scale of that 128-day cycle. Right click, invert scale. And I would also now hide, let's hide the blue data so that we just have the cycle inverted. And now on top we have the S&P 500. So that's the kind now, preparing now the charting logic before jumping into other topics here. And we can even go back now as we have seen that cycle. So here we see, and that's I think what we just analyzed from the extremes. So here we have that cycle low. It was an extreme volatility reading, which confirmed here that low. And we could now cross-check just quickly. So at that point, I would just try the extremes from a bottoming perspective, which is here. Or let's try to visualize that even. So now we could start to make some highlights on the chart. Try that here. So here's one button, one bottom. Let's do that. Here's the highlight, like we have here. And now that's that's then the top. So here's a bottom here, which this would have been identified. I mean, that's not quite a bottom here. Yeah, it's quite an important button. October 21. So, I mean, not everyone, but here you clearly see this major bottom, October 2022. I mean, here, yeah, as the next bottom. We said this one here, clearly standing out at the bottom here. Then we have the April 24, this bottom here. I mean, here that's not really, but here again we had that core bottom here. So I mean, for sure, that's always with cycles. Not each one is maybe turning out, but it is one possible measurement to identify turning points based on timing volatility. Timing volatility is interesting in regards to reading the extremes. That's what I said, which are the bottom cycle swings here in that index. And we quite have an interesting rhythm, which seems to repeat. Not every bottom is then a market bottom extreme, but it worked even 25 years ago up to the bottom we have identified here in April 2025. So having said that, that's meaning we could also forecast how long do we expect this swing to last. And therefore, for sure, I mean, that's the purpose of cycle analysis. Oops. So let's remove that. So therefore, we can now even zoom in. And that's the beauty of cycle analysis. We can plot that into the future, right? So if this was a major low, and then let's just zoom in and look out here. So that possible asset, it's just an opportunity to mid of June 2025. So this volatility-based cycle has bottomed April. It's even interesting to see right in January, February, it's seeing this bottom upcoming. So, but now we are in the upswing phase, which could last into June. So there's still some way to go until mid of June. And also then finally to conclude on that, I mean, never rely on one single cycle. Yeah, that's what we always teach and tell you here in these kind of episodes. You need to look out for cycle within cycle alignments. But if you reverse to last week's session, where I also showed a different sentiment measure, which was based on some fear index and extreme market readings from a complete different data series, you might now see that the next projected top is quite similar to what we did last week and also what the cycle and volatility shows us here today. Yeah. So, and then you add up your decision making based on additional different kinds of analysis you did. So never just follow one simple cycle analysis. And I'm sure you're aware here on that channel, every Monday, we just have time to bring up one possible cycle analysis. And I want to train you and give you more background information on how to use our cycle scanner to repeat that procedure. So therefore, I'm in most cases only using our embedded tools here. So Aligri, if I see your question, everything I showed here, you don't need access to anything in TradingView. Everything I showed here is embedded in our cycle analyzer technology because we have access to the TradingView internal library, at least to chart our own data sets and our special indicators in combination with that. Yeah, as mentioned, this is integrated. And my purpose was also to show you the workflow. Yeah, that's also important. You use the cycle analyzer to derive what composite cycle, what data set. Maybe you upload your individual data set. Then you use the spectrum, the ranking score, the stability, which can only be shown on the cycle analyzer screen because no charting platform will give you that kind of view, that kind of perspective. Once you're fine, once your cycle analysis is done, you save it as a composite. Or you export it into a string and then show it in another platform, which I also showed you often on that channel. Then you move on to whatever charting application you use, and then you add up technical indicators, as I showed how to optimize technical indicators based on that length. Then you plot the cycle as an overlay, like I showed this time. And then cycles help you to get a better understanding. Cycles are never the one and only single truth you should base your decision making, but it gives you a perspective on the x-axis, on timing. Most technical indicators give you just information on price action on the y-axis, not on timing. So therefore, cycles really add up your stack to get projections on the time axis. That's why we are here. That's why we do cycle analysis. I hope you liked today's session. Yeah, so I would call it a day. Dandy Do Basic members have access to that. We will open up, it was previously only part of the higher grade membership levels we have, but as we will extend the features anyhow after the New York conference, those features will also become basic member features moving forward. So therefore, it is available today, and even all members will get access to it. It just depends on which membership level you have right now. All right. Yeah, I hope you enjoyed today's session. Please like, subscribe, tell your friends, and I would like to see you again next week, Monday, same time, same place to do some cycles work here, right? So see you soon. Bye.